Welcome to Volatility 411 for Equity Armor Investments. I am Joe Tigay here on the floor of the Cboe in the VIX pit, and yes, this is the room where it happens. Now, of course, this morning we saw the market up 10 handles in the S&P 500 right to 3290. Why is that level significant? Well, that is where the gap lower happened. From Friday to Monday, we gapped from 3290 to 3245. We covered that gap. Now, this has become a resistance for the market. Now, maybe people might be disappointed considering we got positive Apple earnings last night. Usually Apple will lead the market higher. That's not quite happening today. And of course, the market's settling in back towards unch, maybe a little bit lower. We also are seeing the VIX higher with the market flat, so certainly a little bit of concern out there in the market. Now, under the surface, we've got the VIX right about the same as the future, which tells me that the volatility will be higher for that future. If you look at the VVIX, we're seeing exactly that. The VVIX is 100, a higher level for volatility in the VIX. So going forward for the rest of February, I saw this morning a floor at 15 in the VIX. If that's able to hold, maybe the February range will be 15 to 19, as opposed to the January range where we saw that 12 to 15. So if we're holding above that 15, obviously that'll be the new range. It'll be something significant to me. Below 15, maybe the market can reach an all-time high. Now, going forward, we are unable to break this gap at 3290. Might mean that we're going to look to trade towards the lows on Monday. And if we do, I'll be watching the VIX very carefully. If the VIX makes a new high before the market makes a new low, that'll tell me maybe there's some more room to downside. Maybe a correction of bigger than 3% is in the cards. So I'll be watching. If I see a VIX 20 number before the market is at a new low for the week, that'll be the concern for me. For Equity Armor Investments, I'm Joe Tigay.